Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Tuesday, March 25th, 2025. This is Nelson John. Let's get started. India's healthcare sector is set for a major shakeup. Manipal Hospitals, backed by Singapore's Temasek, is gearing up for a blockbuster $1 billion IPO, likely to hit the markets by June. The hospital chain, among India's top three, is eyeing a valuation of $8 to $10 billion, with investment banks like Kotak Mahindra, JP Morgan, Axis Capital, Jefferies, and Goldman Sachs in the running to manage the listing. You may ask why now? Sources say Manipal doesn't need fresh capital immediately, but wants to build a war chest for a big-ticket acquisition. A part of the proceeds may also go towards debt repayment. This comes after Temasek's $2 billion buyout last year, which took its stake to 59%. If successful, this would be one of India's biggest healthcare IPOs, following last year's merger of Aster and Quality Care, which created the country's largest listed hospital chain. Manipal currently operates 30-plus hospitals with 9,500 beds across major cities. Its revenue surged from 4,000 crore rupees in FY22 to 4,800 crore rupees in FY23, with an improving patient mix and higher admission driving growth, reports Sneha Shah and Ranjini Raghavan. With India's healthcare market booming, Manipal's public debut could be one of the most watched IPOs of the year. What a turnaround! Just weeks ago, the Nifty was deep in the red. Now it's erased all its losses for the year, riding a six-day rally that's put India among the world's best-performing markets this month. On Monday, the Nifty jumped 1.32% to 23,658, while the Sensex surged 1.4% to 77,984. HDFC Bank, Reliance, SBI and ICICI Bank led the charge, fueling a 308-point rally. The correction is done. We could be heading towards record highs, says market veteran Ramesh Damani. Foreign investors are back, pouring in over 8,000 crore rupees in just 2 days, unwinding short positions and pushing the market higher. This marks a stark shift from the past 5 months where India lagged global peers. Now, MSCI India is outperforming the US, UK and Japan, reports Mint's Mayur Bole Rao and Ram Sagar. But is this rally sustainable? It's a trader's market, cautions Swarup Mohanty of Mirae Asset, pointing to global trade tensions and market volatility. Still, analysts believe they can see opportunities in the banking and healthcare sectors. With the rupee strengthening and the US markets wobbling, India's markets may have more room to run. But for now, investors are celebrating a remarkable comeback. India's top IT firms, TCS and Infosys, are tapping into Adobe's AI-powered platforms to win more AI-driven deals, hoping to bridge the gap between global peers like Accenture. We're seeing significant demand for AI in marketing automation and digital commerce, says Ramachandran Srinivasan of TCS. Infosys VP Balaji Sampath echoes the sentiment, noting that over 70% of enterprises are deploying AI in marketing, with 50% seeing real business value. Both firms are leveraging Adobe's AI stack to enhance marketing, commerce, and MarTech services, generating an estimated $500 million to $1 billion annually from these deals, reports Shovik Das. Despite strong partnerships, analysts remain cautious. Generative AI is still in its infancy, and winning large-scale AI projects remains a challenge amid weak global spending. It'll take 18 months before AI significantly impacts deal wins, says BNB Paribas analyst Kumar Rakesh. For now, TCS and Infosys are banking on AI integration and marketing to future-proof their businesses. Whether this strategy leads to sustained growth or remains a short-term revenue boost remains to be seen. For early-stage consumer brands, quick commerce isn't just a convenience. It's becoming the primary sales engine. Companies like Sweet Karam Coffee and Baker's Dozen are overhauling supply chains to meet lightning-fast delivery demands of Blinkit, Zepto and Instamart, reports Priyamvada C. Sweet Karam Coffee, for instance, has shifted from a centralized fulfillment model to regional hubs, enabling smaller, more frequent dispatches. As a result, a six-fold revenue surge, with half of its sales now coming from quick commerce. Wholesome Foods, which owns Slurp Farm, has ramped up restocking, replenishing inventory 3 times a week to keep up with the demand. We fulfill locally in smaller batches, unlike traditional e-commerce, which relies on centralized fulfillment, says co-founder Meghana Narayanan. The trend is catching on. Fireside Ventures, an investor in several emerging brands, says quick commerce is its fastest growing channel. But challenges remain. Limited shelf space, high marketing costs, and operational complexity. Some fear profitability pressures could lead to tapering demand. Still, with giants like Swiggy, Instamart expanding to 100 cities, the quick commerce boom isn't slowing down just yet. The big question here is, can startups scale profitability before the industry hits its limits? Car insurance used to be simple, right? You paid a premium and your car was covered. But today, insurers lure customers with steep discounts, only to charge extra for features that were once standard. Insurers give 80% discounts and then make up for it with add-ons. It doesn't make sense for consumers, says Tejendra Pal Singh of Prudent Insurance. Some commercial vehicle policies are now being issued at 95 to 99% discounts, pushing basic premiums down by 20 to 30%. To stay profitable, insurers have turned motor insurance into a mix-and-match puzzle. Want full coverage? Pay for zero depreciation, roadside assistance, or preferred garages. Some even offer pay-as-you-drive models, linking premiums to mileage. While companies claim these options give customers the flexibility, the reality is more confusion. Motor OD rates are all over the place, changing monthly based on geography, vehicle, and customer profile, says R. Balasundaram of IBAI. The bottom line here, low premiums are an illusion. The real cost of car insurance is now buried under layers of add-ons. And consumers are paying more than ever before for peace of mind. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Tuesday.